Welcome to Super Return Asia. I'm Sarah Clark in Hong Kong. I'm joined by Jay Eum, who's the co-founder and managing director at Translink Capital. Welcome and thanks for joining us.
Thank you for having me.
Let's look at the key issue of ICOs, initial coin offerings. Is it the next wave of disruption? That's the issue I want to canvass. But before we get there, the market, what's the current status?
Well, currently, as of September 2018, the market for ICO is actually down quite a bit from its peak. Since probably starting in March or so of this year, there's been what some have labeled the crypto winter. And so a lot of the cryptocurrency prices and token prices have actually dropped a fair amount. And in addition to that, new ICO offerings in terms of the dollar amount that they've raised, as well as the number of projects, actually has dropped quite well below their peak at this point.
And can you see a pickup again, or?
It's a good question. So if you ask me the question, are ICOs here to stay? Absolutely. ICOs are no different, in my opinion, than any other source of crowdfunding and capital raise mechanisms. So typically, as you've seen models of crowdsourcing for hardware projects through the various vehicles such as Kickstarter or Indiegogo, that continues to be a very active marketplace and enables the financing of a lot of interesting projects. I believe similarly, ICOs will be an opportunity to finance very interesting projects, but there will be a flight to quality, and that's what's, in my opinion, causing the dip today. There has been several ICOs that have successfully raised capital, but in terms of actually delivering on their commitments in terms of products, platforms, services, and building a business out of that, only a handful have really met their commitments, and thus the majority of the ICO projects in terms of token value have dropped dramatically, thus causing a very cautious approach for any new projects and new investors looking to invest in those projects.
Yeah, and it's a complex market. It's less than 3 years old. It's challenging, however, the supremacy of the traditional investment banks for raising new capital. Which countries have taken to it, and what can we expect?
So each country has a different perspective on this. There are countries, if you look at the whole spectrum, that have formally banned any ICOs coming out of their domestic territories. This includes markets like China and Korea. On the other hand, there are countries that have more or less embraced these kind of opportunities, including Singapore, including some of the Eastern European countries, including Estonia. Malta seems to be a hotbed for these new opportunities. And so there's various different, jurisdictions that have taken different approaches. For example, where I am based in the US has taken an approach where they consider a lot of these tokenization opportunities and define them as security tokens. And thus, if they are defined as security tokens, that means the SEC has actually stepped in and has formally started to influence and take a close look at these various opportunities to make sure that they are following the various specific registration regulations that they have very explicitly established. So it varies differently across all jurisdictions. So it's been quite interesting to learn and try to catch up.
So regulation differs depending on geography.
Right.
So despite growth, some are still sceptical. Why? What's the key reason?
The key reason for these continuous to...
Well, yes, the skepticism, certainly, by some markets.
Well, so I think the simplest way to explain it is the stage of development versus the amount of capital that is being raised through ICO vehicles. There is clearly a mismatch. So in many cases, ICO projects go to market for financing when they have what I would call a conceptual stage with a white paper and a business plan that basically promotes and tells investors that they are planning to do A, B, and C. But they're raising large amounts of capital that are typically reserved for later stage growth type investments that have already proven the business model, that have customers and revenue. So if you think about a seed stage company from a development perspective raising a series, let's say C round financing, there is a mismatch there. And so what's happening is that mismatch is actually converging now so that unless the project has some substantial progress, they have the platform developed, the token issued, and they have usage of it, yes, they can raise a successful ICO and raise several money. But if they don't have that, and it's an early stage, then the ability to raise any sort of large amounts of capital diminishes quite a bit.
Okay, what are the benefits to issuers?
Well, the issuers have the opportunity to raise capital in a, well, it used to be, a much rapid pace, a larger amount, and be able to take that capital and go out there and develop and build what they're planning to do. Now, as I said earlier, the scrutiny to fund these projects that are still at a conceptual, theoretical level has gone down quite a bit. Although there are some projects that have the credibility because the founders have the background, have the experience, and have done it before, and they are able to actually get partners that have already announced their partnerships and say that if these guys build this, we are going to adopt this, and thus are still able to raise a lot of amounts of capital. I think at this point in time, the distinguishing factor is really the level of experience and execution capabilities of the team. Because the concepts itself and the opportunities themselves are generic for anybody. Anybody can say that they will build a tokenization model for the advertising industry or the entertainment industry. That's easy to say, and that's relatively easy to put that in a business plan. But has the team actually demonstrated the execution capabilities? Do they have the industry relationships, the experience and know-how to do that? That's a very different matter.
You canvassed earlier, are ICOs here to stay? Can I kind of explore it a little bit more?
Sure.
Could we be replicating, or could there be a dotcom equivalent, bubble crash?
Well, I think what we've seen in the past few months is almost the equivalent to that crash. A lot of these tokens are worth less than 10% of what their initial issuing price was, which is reminiscent for folks that have lived through the dot-com era. And so a lot of the projects are not worth what the ICO prices they initially raised upon. There's no question about that. I would say even as much as over 90% are. But as we all know, even during the dot-com bubble, while over 90% of those dot-com companies failed, there were several that emerged to be global giants. One company that comes to mind specifically is Amazon, that was started during that dot-com era and has continuously executed and now has become such a dominant company. As investors, what we're hoping for is to find the Amazon equivalent out of the dot-com era here in the blockchain ICO era as well.
Okay, so final question. What's your advice to potential investors?
Well, again, I think there was a time where ICOs were looked at almost as a different animal, where the tide was raising, the ICO tide was raising all boats, and you couldn't do wrong in terms of investing in any ICO, and it would typically appreciate once it started to get to exchanges. That era, in my opinion, is gone forever. And so you come back to the fundamentals, the basics, where you look at the team, the capability of the team, you look at the market opportunity, and then their technology execution capabilities. And that is no different than how any investor would look at an equity investment opportunity as well. So the good news is, despite the concern that we had earlier this year about, is the VC model gone forever? I don't think that is the case. And I do think that those fundamentals are converging. So any investor that is looking at these ICO opportunities should look at it from the same lens and spectrum that they've seen traditional equity investments.
Jay Eum, thank you very much for joining us.
It was my pleasure. Thank you.
Thank you for joining us, and if you'd like to see more from Super Return Asia, you can go and find us on Twitter. Just look for #SRAsia. See you next time.